Traders at Axis Bank anticipate a slight bearish sentiment in the bond market today as investors take profit in order to fund their settlement obligations. Meanwhile, the liquidity squeeze is fueling sparse demand in the T-bills market. Kinskin Ukeje, Treasury Team Member at Axis Bank, joins me now for some more market updates. Thank you so much, Kinskin, for joining us on the show today. Let's start with the highlights of transaction and investors' response to Monday's bond auction, where about 360 billion naira was offered, and now the need to meet up obligations.
Yeah, good day. Thank you for having me. On Monday, we saw the DMO conduct a bond auction offering 360 billion across the 28s, the 32s, the 42s, and the 50s maturity. And we saw the DMO at the end of that auction borrow about 368 billion from the market across those maturities, and the 28s closed at a stop rate of 14%, the 32s at 14.8%. We saw the 42s close at 15.4%, and the 50s close at 15.8% in that auction. We have seen the market liquidity open at a ripple of 264 billion on Monday and worsened further to open at 343 billion yesterday. What we'll be seeing in the market going today is quite a little bit of a bearish sentiment, as a market participant who had gone for the auction would want to take up profit as well as fund for the auction debit, which would sink the market further into a ripple today.
Okay, now talking about yields as well. For T-bills, we've seen about offers seen with yields of around 10% levels. Let's talk about that. What we also expect for the bond market as well, looking into the rest of the week.
So looking into the rest of the week, we would see no much activity till the end of the week. However, next week, where we are expecting a maturity and fact payments, and we are expecting a bond maturity and coupon payment to the tune of about 800 billion. We should see that clean up the repo in the liquidity markets, in the liquidity space, and then you would see demand from investors who are trying to reinvest coming to the market, and then we should see yields inch down a bit.
And talking about the money market now, we're also seeing the FX market. We're seeing the importers and exporters window around 463 naira to the US dollar. This rate, there's a little uptick from the 461 that we saw about a fortnight ago. Do you think we'll see any further appreciation in the naira?
Yeah, on the I&E space, what we're seeing is the push by the demand, making it go by the 1 naira depreciation we saw yesterday. We continue to see demand that is continuing to outweigh the supply of funds in that market. The CBN has been trying to intervene in that space. However, the demands continue to outweigh supply in that market, and that's what is causing the price adjustment at that point, and is currently at 463.25 levels.
And talking about levels that we anticipate today as well, we're also expecting the CBN to intervene as well in the SME segment.
Yeah, the CBN usually intervenes in the SME and invisible segment of the I&E market on a weekly basis. Yeah. We've not seen that intervention come at the early start of the week, that's Monday and Tuesday. However, the CBN at most times intervene on Wednesday, so we're expecting that intervention to hit the market today before the end of the week.